And the other thing I really want to, make note of is that one of the fastest growing areas of the entire, media world is connected TV, advertising on these internet connected TV screens. YouTube is the number one player in that space in terms of overall ad revenues.
Hey gang, it's Monday, August 9th. Eric and listeners, welcome to the Behind the Numbers Daily and eMarketer podcast made possible by VTEX. I'm Marcus and I'm joined today by one of our senior forecasting analysts. It's Eric Haggstrom.
Thanks for having me, Marcus.
Of course, chap, it's always a pleasure. Today's fact: camel humps are devoid of water. Camel humps, they're not for storing water apparently. They're for insulation and food storage. The hump is almost all fat, which regulates body temperature and serves as an alternative fuel source when they're wandering for days at a time with no food in sight. So, where do they store their water? Right there in their bloodstream.
I'm going to keep thinking that there's water in there.
Me too.
Yeah, it sounds
When
better.
I read this, I was weirdly furious, as though I'd been lied to by an actual camel. Why do we all think that?
You can't trust camels.
Can't trust camels. Not anymore. Can never trust camels. They've ruined it. They've ruined it for everyone. Anyway, today's real topic, Google's Q2. So we're talking about Google today. How did they do in the 3 months that consist of April, May, and June? We'll talk about some of their revenue highlights and get Eric's take on which line items jumped out to him. So the highlights, Eric: Google made $62 billion in Q2. That would be April, May, and June. So every time I do the earnings, I think to myself, how are we supposed to wrap our heads around this kind of money? So this hopefully helps. $62 billion. If you had $62 billion, you could give every adult and child in America $200. That's $62 billion. Also, if you try to save $62 billion, you'd have to save $100,000 a year for 620,000 years. That's how much money we're talking. If you're one of those lucky people who makes a few million a year and you somehow can afford to save 10 grand a day, it would still take you 17,000 years to save what Google made in April, May, and June of this year, 62 billion. So anyway, that's $62 billion for you. They made it in Q2. Rather coincidentally, that's 62% up from Q2 of last year, when growth was down 2%. Heck of a bounce back. In terms of ad revenue, Google made $50 billion, 50. So 4 out of the $5 the company made came from advertising. That ad revenue was up nearly 70% year on year, 70. $50 billion in ad revenue. If that's not making any sense either, Ronan Shields of Adweek says, think about it like this. Over the last 3 months, though April, May, and June, the world's biggest digital advertiser brought in $560 million in ad revenue every day. $500 million in ad revenue every day for Google in Q2. Breaking down their ad revenue, Google Search and Other, Google Network, and YouTube all saw growth of over 60% each. Google Search makes up 70%, and Google Network and YouTube each have a 15% share of Google's ad revenue, respectively. So, Eric, let's start with an overall letter grade for Google, and then tell me what jumped out to you and why.
So this was a strong quarter for Google. It's been a strong quarter for every digital ad seller. And just to put in perspective, last year, over 40% of all digital advertising in the US flowed through Google systems in one way or another. Mm-hmm. And about over a quarter of all advertising in general was spent through Google. So just to put that in perspective, this is
total
how large
US
they are.
advertising. A quarter went through. Wow.
And that's including TV. That's including, radio and other digital. It's a massive, massive player.
If Google was a channel in its own right, it would be a quarter of ad spending. Wow.
The second thing, though, is that, look, this is the world's largest ad seller, and they grew their ad revenues 69% year over year growth last year. And certain parts of their ad business grew even beyond that, like YouTube. But let's kind of tailor back and talk about what those growth numbers mean, because they're year over year comparatives to really the bottom of the whole economy last year, but most importantly, the ad market in general. COVID happened. You saw lockdowns beginning in some areas in late March, more areas in April, and advertising dipped pretty significantly. Travel advertisers pulled back almost completely because people couldn't travel because of travel restrictions or were too scared to. But something really, really interesting happened last year, and that's that one, people spent more time and more money online, and that flowed through advertising to Google search specifically. And they actually ended, I believe, June flat year on year compared to 2019. So despite everything happening, despite losing all their travel ad dollars, they were flat last year by the end of Q2. When we look to the comp this year, you would think that a lot of that growth was coming from travel advertisers coming back and, just a general economic environment. And that's partially true. But when Google spoke about their search business and their ad business in general, they talked about retail being the one key contributor. So there's actually a really funny story about retail and a really interesting story that's happening behind the scenes that, isn't shown in these numbers.
What's going on?
Yeah. So retail is actually what drove Google search flat last year, after losing all these categories of spend. However, when you look at the largest advertiser on Google, or at least one of the largest advertisers, it's Amazon. What did they do last year in Q2? They completely paused a lot of their spend because they couldn't fulfill all the orders that they were getting through. So they paused advertising on Google search. And so that 0% year-over-year growth in June of 2020 means that everyone else increased their spend, not just to overtake the loss of travel advertisers and other affected industries, also to account for the loss of, Amazon. So they more than, over-indexed. What happened this year is, those advertisers are still spending a lot of money. Travel advertisers came back, but Amazon came back as well. And if you look at Amazon's sales and marketing expenses from, this past quarter, which is mostly advertising or marketing expenses, that moved significantly up as well. So I think when we look at these crazy numbers from Google, it's a whole number of things, but a lot of this is a comp to a period where their largest advertisers, Amazon, the travel advertisers, pulled out spend pretty significantly. And a lot of people who came on and spent a lot of money last year are still there. They're still spending money. They're still seeing good results.
Right. I mean, if you just do a quick hypothetical, looking at Q1 to Q2, total Alphabet revenue, I mean, even if you just look at advertising revenue, right? So let's just take...
And the bulk of Alphabet is advertising and,
exactly,
for the most part, will remain advertising for the foreseeable future.
Right. So if you look at Google advertising revenue, Q1 to Q2 2018, it ticked up by a few $1 billion, 26 to 28, pretty much. Q1 to Q2 2019, it went from 31 to about 32, 33. Q1 to Q2 of 2020, it went down, but as I mentioned, 2018, 2019, Q2 typically ticks up by a few billion. So if you play that forward and you think, okay, well, if Q2 last year was a relatively normal quarter and it ticked up from 34 billion in Q1 to 36 billion in Q2, like it has done the previous couple of years, they still would have been on pace for 40% growth from their Q2 this year. So we still would have, under normal circumstances, been expecting pretty strong double-digit growth, but this is built on top of, as Eric quite rightly pointed out, their worst quarter, a quarter of flat growth / especially with Google advertising down 8%. So these rather impressive numbers are off the back of that low point. In terms of traffic acquisition costs, Eric, what did you make of these? So this is the amount of money Google has to invest to draw in the eyeballs necessary to attract ad spend. Its share of revenue for TAC fell from 48% to 42% year on year. Any interesting notes here?
I mean, I would, kind of push back against that statement that TAC is what they have to spend to drive traffic. It's really revenue sharing agreements with other companies for, space. So really what's been happening with Google the past couple of years has been that YouTube has been outgrowing and growing in share of their overall business, which does not carry TAC. It doesn't factor into those numbers. On the search side, TAC share of overall search, which they no longer publish, generally has been increasing. And that's really just due to a shift to mobile search where Google pays out a significant amount to Apple of their overall, in order to be the default search engine on Safari on iOS devices. But otherwise, it seems that TAC in general is really just a share of their search business and a share of their network members business, which network members actually surprisingly has performed very, very well the past couple quarters after lagging behind their overall ad business. And they've called out a few things.
This is Google Network, right?
Yeah, Google Network. Yeah, this is their advertising businesses where they help place ads on, third-party sites, so non-Google properties. So Google Display Network, Display and Video 360, that sort of thing. Their ad tech apparatus, right? And it seems that, app install in mobile games has always been a strength here. It seems to have been growing in share and maybe, led to a bit of an inflection point in terms of overall growth. The other thing too is likely video. We can talk about YouTube a little bit later, but there's likely more video in that than, straight display or banner ads, that sort of thing.
YouTube is exactly where I wanted to go next because of the strong performance across the board for Alphabet and for Google. YouTube was the one that stood head and shoulders above the rest. 84% growth versus as I mentioned, 70% growth for Google Search and other, 60% growth for Google Network. YouTube, 84% growth. That's off a 6% year-on-year growth in Q2 of last year, now up to 84%, booking $7 billion in the quarter. What's going on here, Eric? How is YouTube performing so well?
Yeah, so let's back up to maybe, 2 years ago or so. Google didn't break out YouTube for a very long time. And when they did, it came in a lot lower than what we had expected and what, most of Wall Street and, people who look at Google really closely had expected. It was smaller in terms of the ad revenues. And when you look at survey data and you look at, the overall audience, more people are using YouTube than any other video service. It's, roughly at the same scale as like a Facebook. It's very, very large, right? In terms of their audience, people who are watching YouTube once a month. And there's a number of reasons why that's been held back. It didn't have the same direct response ad business that someone like a Facebook had. Your kind of more typical brand and TV advertisers looked down on it for a number of reasons, including you had a lot of mobile viewership in there, which is treated different than TV screens. You had a lot of kind of scandals around brand safety that I think YouTube has done a really, really great job of remedying over the past couple of years. But they've shown really strong growth since then. And what I really want to talk about with YouTube is that it's not just a mobile video platform. It's not just a desktop video platform. It's also a TV video platform. When you look at some, other research firms, specifically Nielsen, according to Nielsen, something like 7-8% or so of all TV viewing time in the US is going to YouTube. Now, that doesn't talk about YouTube on mobile. That doesn't talk about YouTube on desktop. It's just YouTube on connected TV screens. And that's comparing to CBS broadcasts and ESPN, cable, that sort of thing too. So there's a huge amount of viewership there, and a lot of these TV ad dollars are starting to shift over. And
yeah, YouTube's saying over 120 million US viewers streamed YouTube on their TVs in December 2020.
Yeah. And it's grown from there. And the other thing I really want to, make note of is that one of the fastest growing areas of the entire, media world is connected TV, advertising on these internet connected TV screens. YouTube is the number one player in that space in terms of overall ad revenues. And about 40%, this was about a $10 billion market last year, about a 40% or so of that spend went through YouTube.
Wow.
Now, we report our numbers in net a lot of times and show, what they're actually making after they pay out to content partners, but they are, a significant amount of this trend. So yeah, they should really be talked about in the same space as a Hulu or a Roku or a smaller company like a Tubi or a Peacock or a Pluto.
Talking about being talked about in the same space as, the interesting note from the New York Times article I was reading about how on the Q2 conference call, Google executives talked about how the pandemic had pushed YouTube into becoming more of an e-commerce site. Mm-hmm. What do you make of that?
Yeah, and I mean, this is a trend that we're seeing across all of, really social media and most kind of major digital platforms where, there's a lot of quote unquote commercial activity that are happening on these sites. Think about Instagram. You're following brands and you're scrolling through and maybe, oh, I like those shoes. Maybe I should go buy them, right? Same thing's happening on YouTube. I know that they've called out unboxing videos as being a particularly, popular category. Mm-hmm. I recently bought a guitar amp.
On YouTube?
I didn't buy it on YouTube, but you know where I went? Oh. I went to see, product reviews on YouTube. So product reviews are also a huge driver. I mean, I couldn't necessarily test it out in person because the stores around me didn't have it, but I could, look at, a million people who had their own opinions on it and, mm-hmm. Were sitting there and playing. So ultimately, there's a huge amount of commercial intent there and a huge amount of data and a huge amount of just viewership that is relatively easy for someone like Google to monetize. They can basically sell, you have more direct response happening on YouTube. It's not just a brand platform anymore. It's mostly brand, but yeah, there's a lot of commercial viewership happening there.
Mm-hmm. Something that stood out to me was you mentioned YouTube not being reported for a long while until but a few years ago. the money that Google was making from YouTube, 10%, start of 2019. The money that Google makes from YouTube today, though, is 14%. In Q2, at least. In Q4, it was actually 15%. But let's stick with the Q2. It was 14% of the money Google made came from YouTube. That's starting to rival that Google network share. Yep. So you could see in a couple of quarters' time, YouTube actually overtaking that number, which is interesting.
Cynically, it is in Google's best interest to promote YouTube and, Google Search and their other owned properties, because on that network member side, they're paying out 70% of every dollar they make to their various partners. Whereas on YouTube, they're paying out a little over 50%. On Google Search, they're paying out, I believe it was 15% the last time that they actually reported.
Right.
But it's, I don't want to say that they're prioritizing certain businesses because of that. I think they like all of their businesses equally. And there's also just been a huge trend to video. TV advertisers are starting to shift a lot of their budgets over to more digital platforms, largely because of audience erosion and cord cutting. This is a whole nother topic that we could spend an hour talking about, but at the same time,
years.
Yeah, years, exactly. It's both overhyped and underhyped, but it seems that a lot of those TV dollars and TV budgets are starting to shift over to, more premium video platforms like a Hulu or a Roku, but also to a platform like YouTube, which is a lot of user-generated content, but it's also a lot of professionally produced content, and a lot of that viewership is going to professionally produced content, and the ad dollars are certainly following. So,
yeah. Speaking of premium video, the Sovereign Wealth Fund Institute, SWFI, has also pointed out that YouTube's Q2 revenue of $7 billion drew even closer to Netflix's quarterly revenue that was $7.3 billion.
So just keep in mind, too, that $7 billion that YouTube had in the past quarter is only their ad business. It does include their subscription businesses. So YouTube Premium, YouTube Music, and YouTube TV are not included in that.
Yeah, we didn't get much from them, did we, in this earnings? There wasn't too much to report, it seems.
Yeah, I mean, it's something that they generally
just
don't
said they're
talk
doing
about.
well.
They're doing well. We have estimates for them. They are pretty large businesses. And, YouTube, when you factor in those subscription businesses, is probably larger than Netflix. The other thing that I do want to mention, though, around the subscription businesses, though, because this does come up quite a bit, is, the question around, will subscriptions take away from YouTube advertising, right? Will this impact growth? Will this, potentially impact viewership in a way that advertisers aren't going to want to, there's going to be a shrinking case. In my opinion, the subscription services for YouTube are largely and almost entirely in support of their advertising business. So if you look at YouTube TV, this is a digitally delivered cable service that, in my mind, is a way to give an on-ramp to, TV advertisers. You're still advertising against TV content. Inventory is relatively limited. And then you can go into the normal VOD stuff when you see good results on YouTube TV. And you can expand your buys from there. The other thing is it keeps the networks happy, who do provide a significant amount of content for YouTube, because ultimately that $65 a month that you're spending on YouTube TV, nearly all of that, or even potentially a little bit more of that, is a direct pass through to your network. So your ESPNs, your MTVs, your Food Networks, that sort of thing. Right. And there's a similar dynamic happening with YouTube Premium, which, they're ad-free YouTube, which comes with YouTube Music for free. And music is the number one category on YouTube in terms of viewership. Likely, this is another way to keep the music labels happy, because there's a similar dynamic going on there too.
Final point on YouTube from me, the Sovereign Wealth Fund Institute, again, also noting that Google had said YouTube Shorts, the company's new TikTok competitor, just surpassed 15 billion daily views, up from 6.5 billion views in March 2021, so up threefold. Google made, just to round this out, Google made nearly as much this Q2 overall as the previous two Q2s combined. So just an absolutely epic quarter for the company. Also, $18.5 billion in net income. That's way more than double what they pulled in last Q2. David Straitfeld of the New York Times points out that what Alphabet made in profit, $18.5 billion in Q2, is more than they made during the entirety of 2015. So we've got time for the first half. Time now for the halftime report. Eric, do you want to give us your takeaway or takeaways from the first half?
Ultimately, Google put forward a huge quarter. At the end of the day, whenever you see a company that is, roughly a quarter of all advertising sales in the US grow 69% year on year for the ad business, I mean, that's kind of incredible. Like, you don't see that every day.
Makes no sense. That's what we've got time for the lead story. It's time now for In Other News. First, a quick word from our sponsor, VTEX. Retail's next competitive threat may come from a business model or channel that didn't even exist a few months ago. This modern dynamic requires companies to adapt quickly, pivoting business seemingly overnight, something traditional commerce platforms just can't support. There's a new enterprise commerce platform on the rise, one that's fast, flexible, and doesn't require 9 months and $1 million to get up and running. Go to vtex.com/eMarketer to learn more. Folks, we are back. It's time now for In Other News. Today, YouTube continues to develop its CTV ad offerings, what GDPR taught us about privacy upheavals, and why CMOs need to demonstrate the value of their work now more than ever. Story 1. YouTube continues to develop its CTV ad offerings, notes Insider Intelligence analyst Nina Getson. In our eMarketer briefing newsletter, she writes that Google just announced several improvements to its Display and Video 360, DV360 ad offering, including better targeting and measurement capabilities. The improvements will apply across Google's CTV solutions, including YouTube. She points out targeting. Advertisers will be able to select CTV ad inventory based on contextual signals. Think length, content type, or genre, like sports, for example. And she also mentions measurement. This fall, YouTube will partner with Nielsen's Catalina Solutions, NCS, to offer sales lift measurement for US CTV ads. So Eric, Nina wrote that, quote, as cord-cutting rates increase and CTV's capabilities keep improving, it will get harder for marketers to stay away from CTV, close quotes. How hard is it currently to stay away from CTV?
You know, it's a growing space. At the same time, I do want to pour a little bit of, cold water on the whole situation. It's ad-supported CTV is a relatively small percentage of overall TV viewing. It is more targeted, so you will see higher CPMs, higher efficiency, hopefully, but it's still very much an emerging space, and that's holding back a lot of spend right now. And ultimately, the ad loads are lower, so you're going to have fewer opportunities to reach your target demo. So right now, it's still very much an audience extension buy. You go on linear TV, you reach a mass audience there, and then get demos that do not watch linear through your CTV ad buys. So your cord cutters and cord nevers, that sort of thing.
Story 2, Christina Prokop, CEO and co-founder of data company IOTA, just wrote in Adweek, folks may not have realized that this past May marked the 3-year implementation anniversary of the EU's privacy rules, or GDPR, General Data Protection Regulation. She notes that GDPR taught us a lot about what it takes to survive and thrive amid massive upheavals to the privacy landscape and today's cookieless trenches. Ms. Prokop thinks, quote, the shift to a cookieless world represents a sea change within the marketing industry, and there are plenty of lessons we can take from the implementation of GDPR to guide our industry's journey, close quotes. Eric, are there, and what, if any, lessons can we take from the GDPR intersection?
I think when you start talking about privacy regulations like GDPR, it's always a little difficult and the rules aren't always very clear. I'm sure that there's plenty of law firms that have made boatloads of money trying to get everyone in the industry in compliance. But what I will mention is that I believe last week or a few weeks ago, Luxembourg did announce a pretty substantial fine against Amazon for some of their advertising practices and data collection practices. So at the end of the day, if, Amazon is having a little bit of issues with compliance, it will be difficult for your smaller companies in general. It's a bit of an interesting space, but difficult.
Yeah. Story 3. Gartner research suggests that CMOs need to demonstrate the value of their work more than ever, writes Nat Ives of the Wall Street Journal. That's because marketing budgets have fallen to just over 6% of companies' revenues this year from 11% last year, so basically halved, and according to Gartner's annual CMO spend survey. Gartner points out that marketing budget's current share of company revenues is the lowest since the survey began in 2012, and the first time it has fallen below 10%. The online survey was of about 400 marketing executives across the US, Canada, France, Germany, and the UK. It was taken from March to May on the marketing budgets for the current fiscal years, and the executives mostly came from companies with $1 billion in revenue or more, and from all industries, including consumer products, retail, financial services, media, travel, etc. Eric, your thoughts on this research?
Ultimately, A lot of these numbers vary pretty significantly by industry and individual company. But what I will say is that, first off, CMOs and marketers are under even more pressure than normal to demonstrate, one, value, two, that they're, showing sales lifts and that they are spending their money wisely. And that's part of this whole shift to digital media and the shift to things like, Amazon advertising, Google search advertising, and away from formats like TV and radio that are inherently less measurable. They may provide a lot of value to your brand over time, but that's difficult to measure in dollars and cents terms.
That's all we've got time for. Thank you, Eric, so much for hanging out, my friend.
Thank you for having me, as always.
Of course, mate. Thanks to Victoria, who edits the show. Thanks to everyone listening. I'll see you guys tomorrow for the Behind the Numbers Daily, an eMarketer podcast made possible by VTEX. Did I say thanks to everyone for editing or listening? Because they're not editing.